Salary. To run any business, any organization, firm or company, you need some resources. I am to say you need money, you need computer, you need furniture, and above all, you need manpower. Because to handle all the resources, you need the human beings. So manpower is the most important resource of the company. If you engage manpower to run the business, you will have to pay the money, or you will have to pay the reward to them for their services. Now it depends what type of manpower you have engaged in your business. It's a skilled or unskilled. If you engage some manpower which is unskilled and you need it just for factory, I mean to say you don't need any special skill, then the reward paid to that unskilled manpower is called wages. But if you pay the reward to skilled manpower, that's called salary. And one thing more, you must remember about money measurement concept. Under money measurement concept in accountancy, it is said that only those events are recorded that can be measured in exact money. If any incident that cannot be recorded in money, that cannot be recorded in our accountancy. For example, one of your important customers has died. Naturally, it will affect your sales in future. It's a loss for the company. But the death of a customer cannot be measured in exactly money terms. So this incident cannot be recorded in the accountancy. So under money measurement concept, only those incident and events are recorded that can be measured in exact money value. Let's take one practical questions. Transaction number 1. A starts business with cash rupees 5,000. Transaction number 2. Purchased goods from S rupees 1,000. Transaction number 3. Sales costing rupees 800 for rupees 2,000. Transaction number 4. Paid salary rupees 300. And closing stock as on 31st March 2013 rupees 200. Now we have to draw journal entries for all this transaction. Number 1. A starts business with cash rupees 5,000. So the journal entry will be cash account debit to capital account rupees 5,000. And now transaction number 2. Purchased goods from S rupees 1,000. When goods are purchased, they can be of two types, either cash purchases or credit purchases. If in the transaction the name of the party is given, so we'll assume that these are the credit purchases, like purchased goods from S rupees 1,000. It is not clearly mentioned whether these purchases are cash purchases or credit purchases. But this hint has been given that the name of the party, that is S, is given in the transaction. So we are going to assume that these are the credit purchases and money will be paid later on to the supplier. So let's move to the table because we have to find out one debit and one credit. So on debit side, debit all expenses and losses. No. When we buy the goods, when we purchase the goods, it's not expense, it's not loss. Now move to the second option. Debit what comes in. Has anything come in the form? Yes. The goods have come in the form because we have purchased goods. So on debit side, we'll write down goods. Now come on the credit side. Credit all incomes and gains. We have bought the goods on credit, so there is no question of income or gain. So move to the second option. Credit what goes out. What has gone out of the firm? Our promise to the supplier that will pay you after 1 month or 2 months. But promise is not credited, so leave this option. Now credit the giver. We have purchased the goods. Who has given the goods to us? The name of that party is S. So write down S, the giver. So you know on debit side we can't write down goods. Either we can write down sales or purchases. It's a clear-cut case of purchases. So we'll write down purchases. So on debit side purchases, credit side S. Use the suffix of account for purchases and no need to write down the suffix for S because we have got two options. Either we can write down S account or we can leave as it is. Now on credit side, use the prefix that is to. So our journal entry will be purchases account debit to S and the amount will be 1000 in debit column and 1000 in credit column. Now the next transaction, sold goods costing rupees 800 for rupees 2000. It means we have earned a profit of rupees 1200. But be careful, when we are making journal entries, we are not concerned with the profit or loss on sales. I mean to say we are not concerned with the cost price of the goods sold. We are concerned only and only with the selling price. So for us, the transaction is sold goods for rupees 2000. And it's not clearly mentioned whether these are cash sales or credit sales because the name of the party is not given. So we'll assume these are the cash sales. So journal entry will be cash account debit to sales account rupees 2000. Next transaction, paid salary. So the journal entry will be salary account debit to cash account. How we got this journal entry? Let's go to the options on debit side. First option is debit all expenses and losses. Is there any expense? Yes, salary is an expense for us because this is the spending we have to make to run the business for day-to-day activities. So salary is always an expense for the firm. So write down salary. Now come on the credit side. Credit all incomes and gains. Is there any income? No. Move to the next option. Credit what goes out. Has anything gone out? Yes. Our cash has gone out. So write down cash. So salary account debit to cash account. This will be the journal entry rupees 1000 and the narration will be being salary paid. And at the end, at the footnotes, you can write down closing stock as on 31st March 2013 rupees 200. So in this way, the question is